Hi everyone, I'm Faye and you're watching the Crypto Fairy channel. In this video, I'm going to show you one awesome strategy that will bring you a stable income. Using this strategy, I made a profit of $6,593 in just one day. Each of you can repeat it as it is super easy and you'll get a sense of it straight away. Watch this video till the end, go right to the exchange and follow this strategy to get a profit day. Though it's easy, the strategy is unique. Only a handful of traders know it actually exists. So, click the like button and subscribe to the channel for more insights. In the video description, you can find a link to my Telegram channel, where I publish my daily trading signals for you to earn together with me. You now see reviews of my subscribers on your screens. They've already achieved consistent profitability thanks to signals we trade on. Join my Telegram channel and get a stable profit in crypto trading. Now we're going to talk about the ICT strategy. Let's jump in. First, always keep an eye on liquidity. Liquidity is an opportunity to buy or sell a coin at a market price. In other words, this is the number of coins that is currently circulating in the market. So, there are liquid coins and illiquid ones. Liquid coins are, for example, Bitcoin or Ethereum, because the biggest trades usually involve them, and numerous traders are interested in the two. These coins are perfectly suitable for trading with the ICT strategy. How to spot liquidity on the chart? Usually we look for liquidity behind the extreme points. An extreme point is the high or low of a range. For example, there is an uptrend. In the moment, there is a correction with a further growth. Liquidity is located behind each high and low. It's here, here, and so on. Traders place their stop losses behind these values when entering trades. For instance, traders who sold place their stop losses behind this high. Traders who bought here place their stop losses behind this low, and so on. There is a liquidity cluster behind each low and high. Large traders use these highs and lows as liquidity to gain positions. It often happens that the price forms a low, then there is a movement towards liquidity, and the low is updated. At this point, some traders believe that the coin starts to move down, but after that, there is a price reversal and aggressive growth. That's the idea behind liquidity. The price always moves from liquidity to liquidity. A market maker seeks to collect liquidity from pools and deliver the price to the opposite liquidity pool, collecting traders' stop losses. If you look at the flat, the essence of the strategy is going to be clearer. So, here is a flat. There is liquidity above and below it. These are liquidity pools. The price always tends to fill a liquidity pool. It's often the case that first there is a liquidity collection from the bottom of the flat, then there is a liquidity collection from its top, and only after that there is a true movement. This is the basis of the ICT strategy. Any cryptocurrency tends to move flat, so the strategy is very useful and relevant. It is desirable that liquidity is formed for some time. It shouldn't be local highs and lows. Not every high and low is an important liquidity pool, and not every of them is worth focusing on. You should focus only on important levels, such as the high and low of the current day. On the screen, you can see acronyms of the lows for the previous day, week, and month. Pay attention to these indicators only, and you'll get greater profits. Let's move on. Besides liquidity, there is another important tool. It's the point of interest, or POI. Usually, this point is called a support area or resistance area. There are different types of support and resistance, but under the ICT strategy, I have my own definition of support and resistance areas. In this case, everything depends on liquidity. Here you see a flat movement. Here the chart has lows, here are highs, and this is liquidity. There is a cluster of buyers' stop losses behind these lows, and behind these highs, there is a cluster of sellers' stop losses. When the price updates this low, which means the price turns out to be below the low, stop losses for sale are triggered in this range, and wave of sales immediately starts. It's a situation when there are a lot of sales at the same time. At the moment, a major player is buying. Gaining positions is taking place. The market maker uses liquidity to gain their positions. Here you can see how the coin updates the previous liquidity pool and returns to the range. It is important that it is not just about returning to the range, but also about a break of structure, also known as BOS. It means there is a change in the movement direction. This local high has been updated. At this point, the opposite movement is emerging, since there was a downtrend here, and then the uptrend has started. The support area is the place where liquidity is collected. In other words, it is the place where the price started updating these lows. This liquidity pulse, and then it turned around. And this is exactly what we call a support area, since market participants will make purchases from here. The support area in this case is an order block. This is an order block because all orders for sale have been blocked. The order block is a place of liquidity collection with a further price revert. Pay attention to this chart. You can note the order block here. It's exactly the place where liquidity was collected from this low. It was followed by a break of structure since this high was updated. Here's the break of structure and it's the order block. As you can see, an uptrend started afterwards. My fairy like, the next important thing is to have an imbalance after the order block is formed. There is a liquidity pool here. The chart updates it and falls to this point. When the coin starts moving upward, it is very important that an imbalance is formed during this growth. This suggests that the price increases in an impulsive and powerful manner. It's a sign that there is a buyer here. The market maker is interested in bringing the price further. This is not a cure-all, but it's crucial. When an order block is formed, an imbalance should do the same, and after that there is a break of structure. Let's be more specific. It's the liquidity pool, it's the order block, it's the imbalance, and here's the break of structure. The imbalance can be used as an entry point, as an area of support and resistance, since the price always tends to test the imbalance. You can also enter from it. Simply put, you can wait for the moment when the price touches the imbalance or covers it, and then make a decision about entering the position. In this case, we consider the entry from the order block, while the imbalance simply confirms that there is a possibility of further upward movement. There was a break of structure, the price corrected into the order block, and then an impulse uptrend started. My fairy-like. The last thing I'm going to tell you about is Fibonacci retracement. It looks this way. An order block is formed from the liquidity pool, which is a support area. It's followed by a break of structure, and then there's a liquidity emerging. Here's the liquidity below. Here it is on top. All of that are favorable conditions for the ICT strategy because at this moment I expect an upward movement. Here we can observe the break of structure. This is the place of liquidity collection, and here the order block and the imbalance are formed. Currently, the trader waits for the moment when the price is either in the imbalance or in the order block. It is better to use the order block, since in this case, when entering a trade, a stop loss is placed for the nearest minimum or for the order block. If you enter a trade from the imbalance, you'll face a huge stop loss and a very small risk-reward ratio. But if you open a trade from the order block, the risk-reward ratio will increase. It is also very important to have liquidity above and below. You need it below because it is going to be a goal for the market maker. They will collect liquidity, touch the order block, and then go to this liquidity. The liquidity pool in front of the support area is useful for this strategy. At this moment, the trader waits for the liquidity collection, the order block test, and further growth. I remind you once again, the price moves from liquidity to liquidity. The market maker collected liquidity here and went to test the support area where we enter a trade. Then, traders wait for liquidity collection above, from this high. Fibonacci retracement aims to find the best entry point after the correction. There is growth on the chart and you cannot enter here or here, as it is too high. If you stick to this strategy, you need to wait for the price below 0.5 Fibonacci retracement. It looks like this. The chart goes up, you should place a Fibonacci grid on the growth from its beginning, or the local low, to the local high, which is the end of the growth. After that, you need to wait for the moment when the price reaches at least 0.5. In this case, it would be possible to trade from the imbalance since it is below 0.5, but this area 0.62 and 0.79 is OTE, the best area for buying. The same is for selling. If the price falls and goes through correction, it's better not to sell since the value is too low. In this case, it is necessary to draw a Fibonacci grid from the beginning of the movement, from the high to the low, and wait for the moment when the price reaches at least 0.5 or better, the OTE zone. After that, you can open a trade. Here it is, the area of the best entry point. Hence, the probability of a positive outcome for the trade is much higher. So let's cover this one more time. The main tools that I use in my strategy are liquidity, the point of interest, the area of interest, that is, the area of support or resistance in the form of an order block or in imbalance, the break of structure, and the optimal Fibonacci entry point. These are the main tools that I use in my strategy. My Fairlike, it's time to switch from theory to practice. On the higher time frame, you see a strong downward movement followed by the formation of a flat. Let's look at this flat on the 15-minute time frame. We can see that there was a withdrawal of liquidity from this high. Then the price returned to the range, breaking structure. This is where the resistance area formed in the form of an order block. I highlighted the imbalance in blue. Do you see this high? This is the high of the previous day I talked about a couple of minutes ago. It is logical to expect the price to fall, but only after it updates this high and touches the order block. I set up a limit order from this imbalance and the stop loss for the nearest high. I put the take profit on the nearest liquidity pole. The risk-reward ratio was 1:4. Of course, I posted a signal in my Telegram channel so that each participant could profit with me. For this trade, I chose an isolated margin. I set the entry price at 1,766.49. The take profit was 1,714.84, and the stop loss was 1,778.29. After that, I opened a trade. Let's see what happened during the trade. After there was a sharp liquidity collection, the price flew down. Then, for about a day, it moved in the range like that. And then, look, what a sudden downtrend. Cool, right? Like a Grand Canyon cliff. And now look at the movement. How much profit we've missed out. It sucks. Now let's move on to the profit. It was $6,593. $6,500 in a day. How is it to say that a trader isn't the best job in the world? Here are the reviews of those who have already earned with me. I regularly send signals before opening a trade. What does this mean? You no longer need to spend hours and hours searching for information or understanding the chart. My Fairlike, now you know one more strategy. It means that you are one step closer to being called a successful trader. Use the ICT strategy right now so that your profit increases every day. At the same time, keep studying all aspects of trading. Analyze successful strategies and try them out in practice. This is the only way to find a strategy that is a perfect match for you. Follow the link in the description and join my Telegram channel, becoming part of a team of winning traders. In the channel, I publish strategies verified as working by me personally. With their help, my subscribers earn more than $2,000 a week. Subscribe right now. The link is in the description. When you feel you're ready to start trading, sign up on the Bybit exchange and use my signals for successful trades. For a long time, I have been trading on Bybit only. So does my team. Bybit is a reliable platform that keeps your money safe. Besides, Bybit has an easy-to-use interface, so it's convenient for both newbies and trading pros. Registration on the exchange is totally free. I added the link to this video description. I'll say it again and again that you need to trade wisely. Never let emotions take over. Trade only when you're calm and cool. Always think about your every step. Consider risks and weigh arguments. Act only when you're confident about your choice. And of course, risk only that money you're ready to lose. Even a wise man stumbles. Don't forget there is never a 100% guarantee in trading. My fair like this video and subscribe to my channel if you want to keep abreast of the latest trends that will help you enhance profitability and get closer to the cherished riches. And this is Faye. See you in next videos.